the S&P 500 and the Nasdaq 100. The Nasdaq is currently what we're looking at, and you're making lower highs basically since the 23rd of May. And we're kind of tracking back to the downside. Now, the major support is right about here, our previous all-time high, 18,707, 18,710, from, I believe, around March. I do believe, yeah, March 21st, give or take. And that's kind of where we're coming back into right now, slowly but surely getting that slow and steady retest back down to that level. We've had some bounces in between on the day, but ultimately nothing's able to hold. Now, this is where things get interesting because, again, the data does align with what we're looking at here. Now, really quick, we go into the S&P 500, and we can see, yeah, there's been downside. We're rejecting off of our 53.33 level, our previous all-time high there as well, going way back here. As well back into April, March. But again, we had a new high put in, but that's still the major level I'm watching. As you can see, we're making new resistances and pushing back down, preparing to test around the 52, 57 level we have marked out down here as well. Now, again, this is the most important thing to me too that I've been watching is what's happening here. And this has been like the story for the past like 2 months now, or about a month, give or take, right? Basically, since May, I mean, you've had low volume in April, don't get me wrong, but in May it was really bad. Basically, May has topped out with the highest volume around 72 million. Your volume is just slowly just deteriorating, it seems, right? Like coming down to 30 mil, that's our new average, right? We go look at some of the data over here on SPY, and our average SPY volume, you know, on a low day, which was Mondays, we're around 63 million, with the middle of the week being around 76 and highs near Fridays being around 87, 86. I mean, we've literally cut our volume in a third. Like, that's how bad this is really looking, or at least in half, okay? And so there's just a lot less activity. Now, could that be because less shorts are coming into play and there's less overall sentiment in the opposite direction, meaning more people are just buying, sitting, holding, doing not too much? Possibly. But again, you expect to get more action when you're moving at least, or reversing or anything like this, right? I mean, this is pathetic. This is very, very, very low volume, okay? Now, the other side of this, though, we have some pretty big information coming out over the next 24 hours, okay? Really, next 48. So tomorrow morning, you have jobless claims that will be big. You have PCE prices coming out, or no, sorry, yeah, PCE prices, which is not PCE data. We'll go into that in a second. But GDP in the morning. GDP will be the most important, what I'll be looking for to see if we're still seeing an area of growth in the market. But on top of that, the jobless claims. Jobless claims, GDP tomorrow morning. Now, after that, that's where things really start to heat up going into Friday with core PCE data. That's what really matters. That's Friday morning at 7:30 a.m. Central, an hour before market open, 8:30 Eastern. What that's going to be going over is inflation data happening now. Now, we've seen CPI slow down. We saw PPI slow down. Now, if this can roll over into PCE, I think it's potentially setting up for a pretty good end of, or beginning of summer, right? Beginning of June, right? Those are things that we should and have to be looking at. So again, a lot happening in the next 48 hours. Short term, what we're looking at, jobless claims, and then of course GDP. Those will be very, very, very important tomorrow morning, an hour before market open. So again, what I'd be watching for there. All in all, though, the biggest thing I'm watching for as far as futures, indexes, etc., is the Nasdaq's reaction to 18,707. That is what's most important to me as well. Those are the two things. Mark them on your calendar, mark them on your chart. That is what you have to be focused on in the next 48 to 24 hours. Now, going quickly into SPY as well. We look at SPY, what's happening here. SPY is still holding up very good, holding up pretty well. You're just trading really in a bit of a range, right? You can't get back above 531. You're trading back into 524.6, 524.5, the level we've been discussing as well. So not a big surprise here. It's our previous high that we had here as well on SPY. So again, we want to see how we react, how we hold up. You also do have that gap fill coming in right there as well. So again, 2 little areas I'd be watching, 424.5, 423.9. So again, everything is a little bit up in the air with the data that is dropping tomorrow. So things we have to be looking at. But really quick, let's go into this.
Okay, so this is probably not the first time that you've seen me talk a lot about the sponsor of today's video, Moomoo, but I haven't told you about why I decided to partner with them, and I just want to be transparent with what's happening there and why they're going to be a partner for the foreseeable future. So partnering with Moomoo for me has been a little bit of a game changer in what we're doing with the channel, because we like to do a lot of free content, but ultimately what we're doing with them is unlike any other trading platform. Moomoo has a super robust, user-friendly mobile platform when it comes to news, when when it comes to options, your watch list, everything like that. The mobile and desktop allows me to effortlessly look through and analyze everything that I'm looking at. It's all kind of in one place, especially before executing anything. And speaking of executing, Moomoo is offering a zero contract fee for options and only charges 50 cents when you're trading index options. So very important to know that as well. Unlike other platforms which have a similar offer, Moomoo provides me with deep analysis and unusual options activities. So instead of using other platforms, I can kind of do most of my work in one platform just like this. And this is the desktop platform, just so you can see, where I can look at unusual activity as well. If you are interested, there's never been a better time, because right now new users will get a 1.5% cash reward up to $300, or if you're just getting started, you'll get 7 free fractional shares up to $5 per if you make a qualified deposit bonus. Just go to moomoo.com. It shows you all of this. It's right there in front of you, so you can make sure you have all that understand. They want to help you kickstart your journey when it comes to investing. Check them out. The link is down below.
Now, after we get out of that, guys, I just want to let you know, if you're not following on Twitter, I recommend doing so. First of all, I try to get as much free content out there, and I'm really trying to be active on Twitter as far as updates, things I'm looking at in the market, stocks I'm liking, news that's coming out as well, different setups, right? So again, the Twitter link is down below if you're interested for all types of setups, updates in the market, things I'm looking at. So again, if you have questions and stuff, take advantage of the Twitter while you can. So again, we're going to go into equities really quick, but I do want to circle back as well. So really quick, the dollar. I mean, these are a few signs that we've been talking about that could, show up for weakness in the market, okay? Now, number one is the dollar. The dollar's been bouncing your 200 SMA. You're getting back above your key level, 104.97 locally, right? Breaking back up. That's a risk-off signal, okay? It is what it is. 30-year yields. What's happening here? Still bouncing. Hit the 200 SMA, held, bounced back up, got back above your key level. Worrisome signal here. Not something you like to see. And then this is the really big one. It won't affect us right now, but again, you're still in a bit of a pinch, okay? You continue to hold, this is oil, crude oil. You continue to hold your 200 weekly SMA down here, and you're pinching between your 200 daily, 200 weekly down here. You've got rejected here again on oil. So we want to see oil stay down. You need to see oil stay down for inflation data. I do think with inflation data, I think it's going to benefit inflation data with how oil has been tracking down basically since April. That's a really good thing here. Okay, so you want to see oil continue on this downturn. If it mounts back above the 200 daily, you're going to have big issues. But one thing I will say is you've bounced every single time over the past year or so since 2023 in June. Every time you've touched the 200 SMA on the weekly, every single time you've bounced over and over and over. So again, I'm not getting incredibly bullish or bearish on oil to really get inflation down until we really break and hold below 200 weekly. But again, things I'm looking at right now, and you're definitely seeing the reaction as oil's bounced. Guess what? The DXY, the US 30-year yield, those have bounced as well. And those have been pretty big signals on the market. Now, what I will say, though, despite those signals, despite what's happened there, the Nasdaq has held up. In recent months, we saw when, those signals started to, uptick, that's caused the Nasdaq to show some weakness. I don't think necessarily it's caused the Nasdaq to show weakness here, okay? It's held up a lot better than it has in previous months. So again, things to consider, things to watch. Now, equities, what we want to see here. Also, too, guys, you see my indicators on my screen, everything going on here. I don't have my volume indicator on here. It got messed up. They're reworking it right now. But just to let you know, if you're interested in our buy sell levels, everything like that, the link is down below for Lux Algo. The code is OD40 for 40% off. They said they were only going to allow so many people to do it. They've just left it on there. So again, until it gets taken off, I'm going to keep giving you the signals, right? Or give you the code. Okay. Man, dude, NVIDIA, what a beast. Okay, NVIDIA continues. As you can see, we had that, Friday close, gapped up, moved up. You're making higher lows here. You look really, really good. Okay. I think NVIDIA wants to continue. The only bad thing here on NVIDIA is, as you look here, NVIDIA is still tracking to the upside, but NQ is not really helping you basically since noon, right? So that's the problem there on NVIDIA and what's happening with some of these stocks. So again, keeping my head on a swivel here, but again, I still think a lot of these names look inherently very bullish. It's just indexes are hurting you. That was kind of the story today in Discord that I was telling everyone. By the way, the first is when Discord spots are available, just to let you know. We go look at something like Microsoft. Microsoft is just sitting at highs. After hours, you're down at 427. Don't get me wrong, but you're just sitting at damn near highs right now. Kind of crazy, all things considered, right? All day long, despite the selling, you just sat in your highs. You didn't really see the selling step in. Meta, kind of sitting at highs, not doing anything. Netflix made new highs and kind of sat there for a while. Like, do we see the going trend here? Like, equities are holding up despite Nasdaq dipping back down. You know, even AMD kind of started bouncing to 166, holding up here as well. You did drop down initially on the day, but for the better part of the day, you just hold it near 166. Micron, again, I'm just going over some of the strongest names over the past few weeks and months, right? Micron sitting, you know, near high, still sitting over the major key level. Now, could this sell off? 100% it could, right? And the longer the Nasdaq shows weakness, the more likely it is for the sell-off to occur. And right now, I think there's a lot of signs of weakness out there right now. So you need data to come in good. But that being said, if data steps in the right direction and continues to, you know, improve like it has been over the past 30 days or so, there's a high possibility these names could start really taking off here. And again, I know you're thinking like, Tyler, what do you mean really take off? Nvidia's already ran. Well, there's other names like Apple that are bouncing back into like, you know, 190, you know, bouncing almost 193 today, right? Those names are getting love. Those names are getting good news coming out. So broad market, I'm careful to say that I'm net bullish on everything and everything's going to keep running because I don't think you have to get data supporting it. You have to get a reason to get the bulls back into this as well. But if you get even a smidge of good information or data, I do think the continuation just happens. It's my personal opinion with how we're moving. Now, again, though, I will say lot of area of caution here going into tomorrow. Lots of caution, right? You got to hold above 18,707. You need decent GDP. We need to see job numbers come in higher as well. That would be beneficial. That's what really started this whole thing. So those are things that we need to happen. If those happen, the continuation is very, very likely. Okay. So those are things that we have to be watching. Now, I was going to go into the option chain. I just don't want to even cover the chain today. There's not like a lot of stuff I want to talk about because I need to see what happens first here with the overall indexes and that data. And I don't want people just jumping the gun, going, you know, willy-nilly long on everything, right? So those are things that we need to be paying attention to and focused on in the short term as well. Okay, now overall favorite stocks here, again, Nvidia still looks really clean. I think this thing wants to run towards 1200. It's, you know, crazy, but it is what it is. Okay, it still looks really good. The PE ratio continues to impress. It is what it is. Robinhood continues to look very good as well, near $21, trying to break out. So again, very strong. EMPH, again, if data comes out good tomorrow, I think EMPH looks really good as well to the upside. Would be watching that one. I think Microsoft wants to break, even though it's down here in the post-market. I don't really care. We'll see what happens at market open. But Microsoft, if it gets above 231, I think it's going to rip as well. Another great looking name there. So again, broad market, you look decent, you look good. But again, the overwhelming thing that has to happen is you need to get some data tomorrow. Like GDP, jobless claims, PCE. Very big next 48 hours. I can only say it so many times. And people are like, well, what do you think is going to happen? It doesn't really matter what I think is going to happen. It matters how we react to what actually does happen. Does that make sense? And I never want to be this oracle that just predicts X, Y, and Z. I like to demonstrate how I trade and how I react to the data and how hopefully I can take, you know, advantage of each opportunity to make money in the market as well. If you have questions, comment down below. I'll see you guys tomorrow. Have a good one, traders.